Good morning, ladies and gentlemen. It's my pleasure to welcome you here to our results announcement for the half year ended 31 December 2011. First and foremost, I'd like to introduce you to a couple of my colleagues on my left. James Burrell, our Chief Financial Officer, Stuart Wing, our Chief Operating Officer based in Auckland, and Aaron Morrison, our General Manager of Business Development and Investor Relations. James and Stuart have been with us for nearly 12 months now, and I must say we're delighted to have them on board and the contribution that they've made. I'm pleased to say for Sky City shareholders for this 6 months, it's been a pleasing result. It's been a good result. And the headline figures show that our revenue for the 6-month period is up 10.3%, up to nearly 500 million, up to 494 million. Our reported earnings before interest, tax, depreciation and amortisation is up 11.5% to 168 million, and our reported net profit after tax is up 17.4% to 78.8 million, nearly 80 million. Our reported earnings per share is up 17.1%, up 2 cents to 13.7 cents per share, and the dividend the board has declared for this half year is 9 cents a share, up from 8 cents a share in the previous period. The results are not too dissimilar from our normalised earnings. We won a little bit more in our international business with a win rate of 1.64% compared to our theoretical, and that led to our reported net profit after tax being up to 78.8 as opposed to, on a normalised basis, 77 million. So turning to some of the highlights, as we mentioned, the reported net profit after tax of 78.8 million was a record first half result for Sky City. Our flagship Auckland revenues were up 14% to 268 million, up $34 million. And the World Cup, we estimate, was a one-off boost to our company of $11.5 million in revenue, 6.5 million in earnings before interest, tax and depreciation, and had a net profit impact of 4.7 million. Excluding the Rugby World Cup, our net profit, we estimate, would have been 74 million, up 10.4% on the first half last year. Suffice to say, there's been a lot of commentary about the Rugby World Cup. We were a little bit disappointed with the overall impact. It came in a little bit less than what we thought it would do, but nevertheless, it was a great event for New Zealand. It was a great event for Auckland. It was a great launch initiative for Sky City and really launched Federal Street and put us on the map, and was a great event for our Grand Hotel and Sky City Hotel. The momentum continues in our core gaming businesses going forward. Strong momentum in Auckland table games, the turnaround of our Auckland table games, driven by the opening of our Horizon property in July, and in our 8 property at the end of August for our VIP table game players. The $50 million developments that we've spent refurbishing and transforming the Auckland property, we estimate have delivered an annualised post-tax return of in excess of 15%. So that's been a really great return on that investment. And our Auckland Machines revenue growth of 17% has been very pleasing following the upgrade and redevelopment of our VIP gaming rooms. In terms of growth opportunities for Sky City going forward, as many would know, we're continuing our negotiations with the New Zealand Government on the National Convention Centre in Auckland, and we're continuing to have good discussions with the South Australian Government and the Casino Task Force in South Australia regarding the Adelaide redevelopment and expansion and regulation. Importantly, and I think it's very important for shareholders, our cash flows that we're forecasting going forward and our current and future debt facilities and capabilities enable us to fund any of these major expansions without calling on shareholders. Nevertheless, shareholders should be assured that we will not proceed with any of these investments unless we're satisfied we will get satisfactory and acceptable returns on shareholders' investment. We have a very sound balance sheet and strong balance sheet at this point in time with our net debt to EBITDA of 2 times. We've got $185 million of committed undrawn facilities, which includes a recently delivered 7-year $185 million bank facility, which will be used to repay the bulk of our USPP debt due in March 2012 of $256 million. That will then leave $330 million of committed undrawn bank facilities. And I'll talk a little bit about more about our financial flexibility going forward, and in addition to that we have over $100 million in cash. So just looking at the headline figures and our group reported revenues and earnings, here you can see our revenue, as we mentioned, up 10.3%, up to 494. GST increased 15% from the prior period to this period, primarily as a result of the increase, one in the increase in revenues, but also in the increase in GST as of 1 October 2010. So the first half of the 11 year was attracting GST at 12.5%, whereas the full period for 2012 was at 15%. So our revenues after that increase in GST are just up 9.9% to 451 million. Our expenses grew pretty well in line with our revenues, up 9% to 283, leading to our EBITDA increase to 168. Depreciation and amortisation was a little higher as a result of some of the investments we'd made and development of the businesses over the period. But our earnings before interest and tax up 13.5% to 132 million. Our interest cost was 25.5 million, up 9% from the prior year, primarily as a result of swapping out of our ACES debt into USPP. We expect that will come down going forward as we swap out of some of the USPP back into the lower interest cost of the bank debt that we have in New Zealand. Our net profit before tax up 14% to 106 million, and as we mentioned, our reported NPAT of 78.8 up 17.4%. So a very pleasing set of results. Looking to our business units and revenue by business unit, and here you can see Auckland up 14.4% to 268 million, Hamilton up 13.7% to 26 million. So Hamilton had a very good result, very pleasing result in Hamilton. We've got a good management team down there, and obviously there was also a little bit of uplift from the Rugby World Cup. Christchurch, not surprisingly, going backwards at 24% down on where we were last time, and I'll comment a bit more about that. And Queenstown pretty well flat. Our Adelaide Casino and Darwin Casino, pleasing results. Adelaide Casino revenues up 6%, nearly 7% to 82 million. And Darwin had turned the corner from the smoking bans and the contraction we'd seen over recent years and started to return to growth, and that trend we're pleased to say is continuing. So we're pleased about that. So overall our Australian revenues up 3%, our New Zealand revenues up 13%. So overall our blended casino revenues, including our international business, up 9.4%. And then on an actual basis, as we said, we won a bit more than we would have calculated at theoretical. So our actual revenues up to 494%, up 10.3%. Turning to our earnings across each of these business units, and Auckland up 13.3% to 114 million, Hamilton up 10%. So that's been, again, a pleasing result, and those two have flown through. And Christchurch, the softness of the revenue has flown through to those earnings coming down as well. So overall, New Zealand up nearly 12% in EBITDA to 128 million. Adelaide up 12.9% to 19.2 million. So not only did we have the revenue increase in Adelaide of nearly 7%, we had some good and better cost management in Adelaide, which enabled us to continue to improve our EBITDA in Adelaide. And Darwin, as we said, we're starting to return to growth to Darwin now, and that's been a pleasing result. So broadly flat in Darwin, but a little bit of growth. Our corporate costs are up a little bit to 13.9 million in this year versus last year, and our normalised EBITDA overall up 9% to 165 million, and reported as a result of the win rate in international up to 168 million. Just looking into some of the highlights and some of the takeouts from those results, now we've been through the core numbers. I think what we're pleased to see in Auckland is the strong fundamentals in our core business and the strong momentum and returning to growth in pretty well all of our segments in Auckland. Over the 4 months since we opened 8, which is the development we did on the rooftop of the Sky City Hotel, for our local VIP table game players, for our New Zealand domestic VIP table game players, and for our Australian VIP table game players. Since that opened on the 31st of August through to the end of the half year, we've seen our volumes, which we measure by drop, up 20%, and our revenue up by 11%. So that's been very pleasing. And the momentum has continued into January and February this year, with our drop continuing to be up over 20% since that period of 31st of August. So we're very, very pleased. You can see the photographs of 8. That bottom picture is the main gaming floor of the 8 area downstairs, or what we call level 8. And that's been very well received by our players, and we're very pleased how that's been progressing. Our international business has gone from strength to strength. And this is the new Horizon development that we opened basically at the end of July in 2011. Our international turnover for the first half year is 1.4 billion. That's up 24% on what it was last year of 1.1 billion. And it's up nearly 200% on what it was in 2010, where it was only 0.5 billion. So we've trebled those volumes, trebled those activities by the opening of Horizon. So that's been a great result. And as we keep going and we look at international turnover through to 12th of February with the introduction of the Chinese New Year this year, our turnover's up 45%. So we've had a very, very good start to the Chinese New Year period. Very pleasing. All our salons and all our rooms and suites are full in Horizon, and that's been a very, very well received product. And if you contrast it to a year ago, we really only had one international gaming salon. And I think for a number of weeks there in February, the first 2 weeks of February, something like 30% of our revenue came from international. 30% of our gaming revenue came from our international clients playing in Horizon and in other parts of the property. So we're really transforming this property into a focal point for international gaming, so that's been very pleasing. And in addition to that, we continue to see growth in our gaming machine revenues, up to 118 million, up 17% over that first half year, so that's been strong as well. And as we said, a lot of this has been on the back of the redevelopment, on the back of the capital expenditure, on the back of the creation of the new VIP gaming rooms, on the creation of the new destination we've created not only in Federal Street but the other rooms we've developed around Sky City. So that that $50 million that we spent, we think has been spent very well, and we're very, very pleased with the results it's achieving, and we expect that to continue for the balance of this financial year and into the next financial year. The non-gaming revenues over the period grew by 13 million, up 23%, and while part of that's attributable to the Federal Street restaurants and bars, Depot by Al Brown, and I'm sure a number of you have been to Depot, incredibly successful restaurant. The Grill by Sean Connolly, equally an incredibly successful restaurant, and the Red Hummingbird Bar by Luke Dello, adjacent to Depot. We're very, very pleased with the results of all of those outlets, and it's really repositioned and branded Federal Street as a destination. And we're very, very keen to roll out another 2 or 3 of those restaurants over the next 12 months. So I think it's very, very exciting. We're getting a lot of approaches from great restaurateurs, not only in New Zealand but internationally, who want to open new outlets in Federal Street. So I think that's a very, very exciting opportunity for us. No doubt the Rugby World Cup, and we'll comment on it a bit more, did contribute significantly to our non-gaming revenues and certainly to our Sky City Grand Hotel revenues, and that was the core contribution of the World Cup, was to our Sky City Grand and Sky City Hotel revenues. As we noted, the annualised post-tax return of the capital that we invested, we forecast to be well in excess of 15%, so we're very pleased with that. And we've touched on the Rugby World Cup benefit of 11 million in revenues overall, most of that out of the hotels, and $6 million in EBITDA. And without the Rugby World Cup, we estimated that Auckland revenues would have been up by 10% and EBITDA by more than 7%. An exciting new development which we've been working on for some time is the introduction of the new Ballet gaming system, and this will be launched in the second half of this year, in around April, May, at a cost of around 10 million. And we're very excited by that and think it'll further improve our approach to customer loyalty, to customer segmentation, marketing execution, our brand offering and host responsibility. So we're excited about that, and we think that will continue to sustain the lift and growth in our revenues going forward. Just some brief comments on the New Zealand International Convention Centre. As many of you would know, we're continuing to work with the New Zealand Government and the Ministry of Economic Development on this initiative. I think it's fair to say it went quite quiet going into the election. Following the results of the election, we've had some renewed discussions, and that's been progressing. What we are seeking to do is to spend something like $350 million to deliver an iconic convention centre for New Zealand on our Hobson Street site. We believe if we get it right, it'll be a win for New Zealand and a win for Auckland and a win for Sky City shareholders. In return, we're seeking an early renewal of our Auckland casino licence, which needs to be renewed in 2021. We're seeking an increase in gaming product to meet demand and provide for future growth going forward. And there's no doubt at peak times we are significantly supply constrained on our gaming floors. We're also seeking changes to gaming regulations which would increase the efficiency and attractiveness of our offering, which we're able to provide for our customers, and really not seeking anything else than what our core competitors have in this space, our competitors in Melbourne and our competitors in Sydney. A big part of our business is attracting international players, from Australia, from the Eastern Seaboard, and it's disappointing for them when they come to Auckland and find that they have to play under a different set of rules and have different functionality on the product to what they're used to. Having said that, shareholders should remain assured that unless we are confident of achieving acceptable returns on this capital investment, and this is a very significant capital investment, the project will not proceed with Sky City. These are some images you would have seen before, the preliminary concept drawings of the convention centre on the Hobson Street site. It is a very, very substantial building, some 30,000 GFA, which for those of you who understand it, it's a very, very large development. And that's at it looking from Nelson Street up Wellesley Street. Turning to other New Zealand highlights, as we noted, our Hamilton property continues to perform well with revenues of 26 million, up 3.2 million, which is up 13%. And if we backed out what we thought was the Rugby World Cup of about 800,000 in Hamilton, excluding the Rugby World Cup, we estimate our growth was about 10%. We're working with the Hamilton Council on trying to conclude negotiations around the development of a 4-star hotel with 135 rooms above our Hamilton property. The property was built to take a hotel on top. We're keen to do that. We think it'd be a great initiative for Hamilton. There's much needed quality hotel product required in central Hamilton, and we believe we can deliver this on a timely basis. So we're keen to work that through, and we'd hope that we'd be able to conclude that. In terms of Christchurch, I think it's fair to say it hasn't performed strongly, obviously, for obvious reasons. But I think it's fair to note that there has been some shift in gaming revenue, and particularly gaming machine revenue, from the Christchurch casino through to the pubs and clubs in the suburbs. So while there's been a big uplift of machine play, gaming machine play in the pubs and clubs in the suburbs of Christchurch, and people forming views about the increase in gambling in Christchurch as a result of the earthquake, I think you've got to measure that against the decline in the machine revenue in the Christchurch casino. Really, a lot of it is people who were coming to the Christchurch casino no longer coming because of its location, its challenging location, being on the cusp of the red zone, to playing in the suburbs. So I think that ameliorates that increase. Nonetheless, we remain supportive of the casino. We're not in management control of that property. We don't necessarily agree with the way it's being run all the time, but we are supportive of it and its longer-term prospects. Turning to Adelaide, it's been pleasing to have continued momentum in Adelaide since the end of last year. Our revenues are up nearly 7%, as we said, to 83 million, and our EBITDA are up nearly 13% to 19 million as a result of good cost initiatives. We have had good volume table games growth, which has been pleasing. Our management there have been focused on customer delivery, on customer experience, and enhancing the customer experience. And we've seen, as a result of that, we've seen regaining some market share of our gaming machine business that we lost in previous years, and this year we've recovered. And as a result, we're up about 9% on our gaming machine business in Adelaide. So that's been pleasing to regain that market share in South Australia. We believe the opportunity to develop the Adelaide Casino into a truly world-class integrated entertainment facility, set amidst the Adelaide Oval, where the government's spending over nearly 600 million redeveloping the Adelaide Oval, and the stands will come down in the next few weeks as they start that redevelopment and transform it into not only a fantastic cricket oval, but transform it into an AFL oval right in the heart of the CBD. To be ready by 2014. As the government spends that 600 million, and as they spend another 300 to 400 million on the convention centre, right adjacent to where we're located, the Adelaide Casino is located on the banks of the riverbank, We think that presents Sky City with an outstanding opportunity for growth. We're working closely with the South Australian State Government. They've released their master plan for the Riverbank precinct, and that master plan does provide for the opportunity for Sky City to significantly expand and redevelop our Adelaide casino, and really to create a truly integrated world-class entertainment facility. And this would encompass a boutique 5-star hotel of around 100 fantastic rooms, signature restaurants and bars, an international standard spa, a rooftop pool lounge, expanded gaming facilities, including international and VIP gaming suites and salons. So we'd pick up our Horizon branded product that we have in Auckland, and we'd transform that into a Horizon product in South Australia and Adelaide. We're working closely with the Casino Task Force in South Australia regarding the regulatory framework for the Adelaide Casino, and the outcomes of those discussions will determine whether or not we're able to proceed in progressing our plans for the transformation of the Adelaide Casino. We need to understand what the regulatory framework looks like for the South Australian Casino, for the Adelaide Casino going forward, and so that's a priority for us, and I think fair to say a priority for the Casino Task Force to put us in a position to be able to invest in South Australia. While we're very excited about this outstanding opportunity and the opportunity to really transform the Adelaide Casino, and I should note the Adelaide Casino is already the #1 tourist attraction in South Australia, and we think it could be so much more with what we want to do with it. Shareholders should be assured that this project will only proceed, again, if we're confident of achieving acceptable returns for shareholders. This is the sort of development that we have in mind, and we'll lodge this with the Riverbank Development Authority the next week in terms of looking at this expansion. And you can see there fundamentally the hotel coming up in front of what is the existing Adelaide Casino, some gaming floors, restaurants and bars at the bottom, 100 fantastic 50 square metre plus rooms going up to 100 square metres in the mid-tier and to 200 square metres at the top, with a fantastic, shall we say, Caesars Las Vegas style pool precinct on the top. You know, the weather in Adelaide is fantastic and just lends itself. It'd be a waste not to do something with that rooftop, and we think that'd be fantastic. And the views from that back over the Adelaide Oval and over the River Torrens would be awesome. So we're very excited about that and believe that is a truly transformational opportunity for Sky City. So our challenge is to work on that, work with the government, work with the Casino Task Force, and see if we can deliver that going forward. That's another perspective on it, and we think, as we say, it's an iconic piece of architecture and really something amazing for Adelaide. Turning to Darwin, we've seen, as we mentioned, our revenues return to growth now after several slow periods, primarily as a result of the smoking bans, but also tourism has been somewhat challenging in the Northern Territory, and we've now seen our EBITDA also return to modest growth. Our local tables business had good growth in that first half year, up 12%. Our Lagoon Resort, and this is a fantastic resort, is being developed and will be opened in July this year and is on budget at 40 million Australian. A huge lagoon pool. We're also now developing some international VIP villas and gaming pavilions around that pool, buoyed by the success of Horizon. We're probably also going to rebrand or brand these as Horizon, and look forward to competing and having Darwin compete in the international VIP market. Obviously, Darwin's got great proximity to Asia, which gives it an advantage over most other casinos in Australia. We're also seeing the re-emergence of Indonesia as a major form of international play for international business, and that hasn't been the case for some 10, 15 years. So the proximity of Darwin to Indonesia is obviously very attractive. The government's also recently announced, the Northern Territory Government, business class flights direct from Singapore. Darwin has been previously challenged by the fact that it didn't have direct business class flights from anywhere in Asia to Darwin, but it now has these. And also in January this year, the government, the Northern Territory Government, announced with IMPEX the approval to proceed with the $32 billion liquid natural gas project, which is going forward, that has been approved and is going forward. That'll be an amazing boost to the Northern Territory, and as you know, Obama was there recently and approved further expansion of the military, US military in Darwin as well. So we think Darwin's got a huge future, and we're very, very comfortable investing in Darwin, and I would expect that we will continue to invest in Darwin and continue to and strengthen our proposition in Darwin. I should note our Sky City Casino licence was extended for a further 5 years to 30 June 2031 over the last 6 months. So just coming back to our funding for growth and positioning for growth, as we noted, our EBITDA, net debt to EBITDA, is only 2 times, currently 585 million undrawn bank facilities with the bank syndicate here based out of New Zealand, plus over 100 million of cash. One of the first things James did on his arrival here is he helped us negotiate a 7-year, $185 million commitment from our local banking syndicate. And that's the first time such a 7-year funding has been provided by a banking syndicate in New Zealand for more than a decade. So I think that's been a great achievement, and one goes to the competence and ability of James, but also I think the creditworthiness of Sky City and the confidence that the banks have in Sky City. When the USPP of $256 million is repaid in March, there will be no further debt maturities to 2015. And our debt profile gives us tremendous flexibility to go forward and fund our capital plans. In addition, we have some capital notes out in the New Zealand community. We've got 94 million which we're currently holding in treasury stock, which we can sell off. They're currently yielding 6.75%. They're actually improving as we speak, and they're now down to 6.7%. So that's another form of $100 million of debt that we can secure, which is pretty well in place. So I think importantly, and this is a very important point, we're very confident at Sky City that we have the potential capacity to fund both the NZICC, the New Zealand International Convention Centre development, if it proceeds, and the Adelaide developments, if they proceed, from our existing resources, from our operational cash flows, and from current and future debt facilities, while we're able to maintain our policy of paying dividends within the 60 to 70% shareholders, 60 to 70% net profit after tax for shareholders. So we don't envisage we'll have to tighten our dividend. We think we're in a very strong financial position, and we can deliver on those 2 major investments if we're able to satisfy ourselves that they deliver a satisfactory return for shareholders. The dividend of 9 cents, as we noted, is up from 8 cents a share. It represents about 66% of our group reported NPAT, within the range of 60 to 70%. It's 60% imputed in New Zealand and 60% franked in Australia. The payment date is the 5th of April, and the entitlement date, the record date, is the 22nd of March. Currently, the dividend, based on the current share price, closing share price yesterday of $3.63, represents a yield of just over 6%. We have decided, given the status of negotiations between Sky City and the New Zealand Government regarding the New Zealand Convention Centre, it wouldn't be appropriate for us to apply a dividend reinvestment plan, as this would require Sky City to buy, sell or issue securities, and we don't think that's appropriate given the status of negotiations. So a DRP will not be available to shareholders for this dividend, but we will reconsider that for the final dividend for 2012. So where are we at, and what are we looking at going forward? As we've said, we believe our momentum's continuing. Group results in January and February have continued the momentum as we continue to capitalise on the investments we've made and the strategies we've put in place, not only in Auckland but in Hamilton and Adelaide and Darwin. Our group revenues in the year to date to February 12, so this is from 1 July through to February 12, including our normalised international revenues, are up 10% for that 7.5 months, and that compares to up to 9.4% for the half year. So the overall increase has actually increased when we take into account current trading. So given the strong first half results, given the continued momentum we've experienced in January and February, given the turnaround in our Auckland table games, the strong Chinese New Year that we're having, the demand for our Horizon suites and salons for our international guests, and the success of our CapEx program in our other facilities in Auckland, we're expecting our normalised net profit for 2012 to be at the top end of our previous guidance range, which means it'll be in the high 140 millions. So I think that's a very solid result for Sky City. It's provided a strong platform. Many of the things we've been working on for a number of years are now coming to fruition, and we're starting to see the fruits of our labours. So, and I'd like to certainly thank James and Stuart and Aaron and the rest of the management team, who I think have done a great job at Sky City over this year. So thank you very much, ladies and gentlemen.